Hello, everyone, and welcome to this latest edition of the Sharesify podcast. I'm here with my usual colleagues, Ian Conway and James Crux, and it's nice to see him back. You know, it was vacant gap in his chair on Wednesday, as we mentioned. Ian, what was happening with you?
Yeah, well, apologies for absence. I think that's what they call it, isn't it, in the meeting minutes? Apologies for absence. AIC summer reception, Steve, which was fab. It was at the Investec offices on Gresham Street. Lovely to see everyone. Baking hot, I have to
Yeah, I
say.
bet.
Absolutely, wasn't it, James? It was
It
roasting
was
hot.
toasty, yeah.
But lovely to see everybody. Annabelle was there. Richard Shepherd Cross, our good friend from Custodian, was there. Emily Church, SEC Newgate, was there. Everybody was on very, very good form. But I see it's been a week of interesting ups and downs in terms of results and investor reactions. But generally for you, I mean, the tech stocks have been positive, haven't they?
Yeah, I mean, there's been a real kind of rally back in the sort of tech space. We were saying on Wednesday about how it's been quite volatile over the last few weeks now, and I think investors are just a bit cautious about the fullness of valuations. And so we were explaining about look beyond the US, but here in the UK we had two IT resellers, the biggest on the market, Computacentre, and also Bytes Technology, which we flagged in last week's look ahead piece, and they were both very, very strong results. Computacentre in particular, it's a decade high, I think, the share price now, an
And
incredible turnaround story.
and that's a FTSE 100 stock, isn't it? If I'm not
Yeah,
mistaken.
absolutely. And Bytes is a FTSE 250. I mean, it's no small fry. I think that ultimately the difference was Bytes was a bit more somber in its outlook, but still a brilliant cash flow business, a better dividend yield. If you're liking that kind of thing, Computacentre though is clearly seeing a very, very sharp uptick in its demand curve. So I mean, basically that space is in a very healthy position at the moment. And of course, we had great a wider kind of insight into the tech space in general today. I mean, one of the great fund managers, in my view, around today, Ben Rogoff of the Polar Capital Technology Trust. I always tip to listeners is if you want to know anything about the tech space and indeed the wider markets, go and read his commentary in their final results or even their interim results. He gives pages and pages and pages of really insightful data, loads and loads of really instructive stuff about what's going on at the coalface. So really to get a real grip on the tech space and the little nuances within the tech space, go and read his full year results today. They are absolutely outstanding. It's a year-to-date performer. It's up about 45%. Over the last year, the stock has doubled over 12 months. It's been an absolute brilliant compounder for investors over a decade, and hats off to Ben Rogoff. He celebrated his 20th anniversary at leading the fund or the trust this week. So you know, well played to Ben Rogoff. It's a fantastic trust. It's in my personal account, so disclaimer there, but really insightful. So definitely go and have a read if you've got the time. Loads of stuff to pull apart there.
Yeah, I'm the odd man out, aren't I? Because both of you own that.
I do as well, yeah. I followed Steve
Yeah,
there. So yeah, I took my cue and it's worked out well.
it has. But a busy week for your names as well, James.
Yeah, well, I've sort of dipped into a few other sectors as well, but there have been some positive updates. So Hayes was one that surprised me. So guiding to the top end of the range, a lot of this is coming from cost cutting and sort of a decline in, the rate of negative net fee income. So not getting too excited about it. And also the outlook's rather uncertain given the AI
Mm.
impact on jobs. So that's one that I wouldn't get too excited about. Also, online gambling platform Playtech has raised its earning guidance. And another one that is also quite surprising was Jet2, which I know Steve covered on the web. So that delivered a strong finish to the year. It's quite an optimistic tone on summer trading. So going into the print, investors have been a bit worried about price competition, late bookings, and that type of thing. Jet2, they also highlighted the resilient demand and a successful launch at Gatwick Airport. So those are the ones that have caught my eye.
Mm. Oh, I was looking at Gleason today. They were all right, actually. The results are okay. Stock hasn't really done much though, and you do wonder, what these companies have got to do really to kind of reignite investor interest. We had Vistry earlier in the week, which I didn't comment on, not being there on Wednesday. No great surprise. It got lowered guidance. I mean, it basically said we're going to take a charge. Took a charge for the first half. We're going to take more charges in the second half, but we don't know how big they're going to be. Market didn't like it. The big surprise this week was AstraZeneca. So, one of the
Yeah.
biggest stocks in the FTSE 100 came out with phase 3 trial results for one of its heart treatments called Wainua, and unfortunately, it didn't meet its endpoints, and the stock got absolutely clobbered. It was down more than 10% at one point, and if you think of the size of the company, that was over £30 billion wiped off it. It ended down 6%, so this was yesterday, but it's down another couple of percent today. And I think the problem is, you know, we're just not used to a firm like AstraZeneca publishing negative trial results, phase 3 trial results. And, you know, I think peak annual sales were estimated at something like 5 billion. So the reaction was way bigger than that. But, you know, 5 billion is a blockbuster. So quite a big disappointment from them, I'm afraid.
It's a really interesting space, I find, the drug discovery, because of course they're going through years. I mean, clinical trials are all about humans, so they've done lots of animal testing before they even get to clinical phases. But of course, you've got to have a big pipeline. So when one doesn't quite meet the criteria for the various regulators, you've got the next one coming through very quickly. I suppose that's going to depend very much. That's going to be, you know, it'll speed up sometimes. It'll be a fuller pipeline sometimes, and then it'll be a thinner pipeline sometimes, and maybe its pipeline is just a bit thinner at the moment, so maybe that's part of the reason why it's been hit harder than you might expect.
Yeah, I mean, it's partnered with a US firm called Ionis in developing this drug. So that's one way you can do it. You can partner with people, you can buy people, leading on to M&A, because this week we already had, didn't we, beginning of the week, ITV selling its media and entertainment business to Sky, to Comcast. Today we had real surprise news, Apollo out of nowhere swooped in with a £7.15 offer for easyJet. And poor Castlelake had made 5 offers, and the last one was kind of okay from easyJet. Today, Apollo's just come in from left field, £7.15, 25p higher than the last Castlelake bid. They haven't answered the question of what they're going to do about ownership, because as a US firm, legally, they're not allowed to own a majority stake in a European airline. I'm guessing they've got something up their sleeve they're going to reveal that maybe next week. But that got the market quite excited. And
but it's interesting, Ian, isn't it? Because I mean, the management, the board, effectively, were talking to Clearlake about, you know, you're really opportunistic. We're going for a bit of a lean time at the moment, but this doesn't really reflect the underlying value of the business. And Apollo seemed to really kind of get that the underlying value of the business is much fuller than Clearlake wins a cough up for.
Yeah, I think the other thing that's been going on behind the scenes is European airlines have been looking at easyJet and thinking, you know what? It's got some nice delivery slots from Airbus. It's got an amazing roster of landing slots all across Europe. And actually, they'd all be, if any of those assets came up for sale, they'd be interested. All European airlines would be interested in having some of that. So I guess the question is Apollo's making all the right noises. It's saying, you know, we thoroughly support the management, we support the strategy, look forward to working with the employees. No hint they're going to break it up. Watch this space. I mean, for owners of shareholders in easyJet, we said, you know, every time Castlelake came back with a bid, we said just remain in your seats. And wait for announcements, you know, because you knew that wasn't the end of the story, and maybe this isn't the end of the story. Maybe somebody else will come along. What are we looking forward to next week then, Steve?
Well, I mean, it's getting quite full. So next week we've got a whole bunch of US earnings starting. The big banks are obviously starting to come out. You've looked at JPMorgan Chase in our look ahead piece today. You've got Goldman Sachs, Bank of America, Citibank. I mean, there's a whole litany of banking companies going to start announcing results, and that's always the sound, you know, the starting pistol to the US earnings season. We've got the AI trades being reflected in ASML. We'll have results out next week, and there's someone else as well. Seagate as well, which is slightly under the radar, very much in the AI space, and TSMC as well will also be unveiling reporting results. And we've got loads of other stuff in the US, Johnson Johnson. We've got Netflix and so on, and there's a whole bunch of stuff in the UK as well. I've been looking at Trustpilot. James, you've been looking at the luxury sector again. Who's that?
Yeah, we've got Burberry Q1, so, you know, investors will be looking to see if the turnaround's still making some progress. The sector backdrop is still difficult. It's another big week for Nick Train because he's stuck with that stock through thick and thin. always champions the brand. So, we'll watch this space.
Yeah, interesting.
And I think, haven't we also got, I know we've got a pod with the fund manager lined up in a fortnight's time, but I think we've also got one with Bloomberg Intelligence luxury analyst, James. So that'll be interesting to get our teeth into.
Definitely. We've got that one on the slate. So just looking to book in a time, but looking forward to that one. Yeah, definitely.
Yeah, well,
Okay,
that's it.
Yeah,
That's it from
on
us, I
that
think,
note,
isn't it,
I think
Steve?
we'll call it a day. Happy Friday to everyone. Go and enjoy the sunshine while it's here. Don't melt too much. We'll look forward to seeing you next time we catch up, probably on Wednesday. Have a good weekend, and that's it from us. Take care. See you next time.
Cheers.